Hello and welcome to my first ever weekly recap video. Um, to be honest, I wanted to post last week's weekly recap, but I wasn't able, unfortunately. But hopefully, this will get to YouTube by tomorrow. I know I had said Saturday, but I changed the schedule a bit to Sunday because that is when I have ample time, so that I can get ample time to record, edit, do all that stuff. So, yeah, so now going to the next topic is I want to thank you for those who watched the previous video. I want to really thank you for that. It's amazing. It's really a blessing to showcase my skill, and I'm hoping to do more and more. So make sure you subscribe, like, comment, do all that stuff that people do on YouTube. Um, Another thing I wanted to address was my mentorship is officially I officially launched my mentorship. So make sure if you like how I trade and you want to trade like I do, this is all transferable. I can teach you how to do all this easily. It's actually a 3-month course where I take you from being a beginner to somewhere you can literally open a chart and see the things that I see. Of course, it will take you work and time, but I promise with dedication and passion and consistency, you will get to the levels that I am at. And I'm not saying that I'm the best at this, but I am somewhere. So you will be somewhere. If this is something that you've always wanted to do, and you've always been looking for somewhere you can start where it's cheap, it's affordable. I mean, of course, it's affordable if it's cheap. So where somewhere where it's cheap and you're getting your value for money. This is not a sales pitch, but this is just actually reality. Value for money, and I'm not trying to tarnish anyone's name out there, but this is actually going to be an amazing time if you just give it time and trust the process. I'm sure whatever I teach here or whatever I'll teach you will make sense as you keep practicing it. Okay, so enough of all that chit chat. Let's get into the market. I did not trade this week. I didn't get any kind of setup that was that. Okay, I'm not saying that I didn't get a setup. There were setups, but the thing is, if you watched my previous video, I said that the trade that happened on Wednesday was a high probability trade. That was an A plus trade, even though I didn't mention that, but it was an A plus trade. That is a trade that I'll take any day. The problem was, I told you that in that video that the reason why I didn't take that trade, I'll tell you in this video, and that is what I'm going to get into somewhere along this video. So watch out for that. Not somewhere along this video, literally, I'm going to tell you like right now. But before we get to that point, I want to address something. I want to address this. Uh, the economic calendar, where I usually start from personally. Yeah. Before I get into all that market stuff and all that, I usually start from the economic calendar. This is something that every trader that exists should be doing. Okay. So, but that is my opinion. So the economic calendar is where it acts like a roadmap for me, where I get to see or get to know what news events are upcoming. So how I trade is completely different from other traders. We are all different traders. There are people who don't trade like I do. There are people who trade like I do not trade. Like, we are so different. So for me, not even to get into all that information and all that. So for me, an ideal week or an ideal way of analyzing the market or analyzing my economic calendar is if I am looking out for the three high impact, those major high impact red folder news, the FOMC, the CPI, the NFP. If I see any of those red folder news that falling in anywhere, if they're up and coming in that week, for example, I am going to skip the day prior. That is an unwritten rule. That is an unwritten rule for me. And another unwritten rule for me is I do not trade on Mondays, regardless of how A plus the setup is. Monday for me is usually not a trading day, and this is something that applies to so many other traders. Um, they say Monday is usually a ranging day, so yeah, it makes sense. So for me also, I do not trade on Monday. So enough of that. So this is my weekly. This is on my economic calendar. This is how my week was looking like. Monday there was nothing, so of course I didn't do anything. Tuesday we had this news here. Wednesday we had nothing. Tuesday, as in it was a clean week. There were not those the three high impact news events. There wasn't any going into this week. So this to me looks like a clean week. So I'm free to hunt for setups any day except Monday. So from there on, I move to this slide over here where if you can read this the watermark, it says Nasdaq 100 E-mini futures. So this is the futures chart. Why am I on the futures chart and not on the CFDs chart? The reason why I didn't trade on Wednesday is what I'm going to explain here. So you can see, if you look at this major sell side liquidity over here, where I've calibrated major sell side, buy side. So here, the major sell side liquidity, you can see that on Friday last week, the Friday before Monday of the week this trading week that has just come to an end, we swept all these equal lows over here. But on the CFDs chart, which is this one, we didn't. So since I trade CFDs, I do not trade futures. This to me was kind of like giving me some. I was a bit skeptic going into this week. I needed to see more confirmation, and the more confirmation the confirmation I was looking for, unfortunately, happened on Wednesday. That was the day that when I was supposed to be aligned in that trade, um, that was when it gave me the confirmation. But there's no problem over there. It's okay, it's fine. There's going to be more and more setups. But ideally, what I'm saying is when we have failure swings like this, and we had this kind of movement where we closed below this up close candle over here, for me that gives me a more I want my work as a trader is to observe what market is doing and make a decision out of that. It's my work is just to decide whether to buy or sell, but based on the information that I was given. So going into last week, I was kind of like, let me see if we want to sweep all this sell side over here. But again, as fate will have it, or as the market will have it, we bought all the way. Someone will ask me, why didn't I look for a setup going into Thursday, Friday? Because Wednesday I missed that setup. Because that is when the best setup happened, by the way, on Wednesday, if in my opinion. That was when the best setup for buys will happen. If you bought on Wednesday and then held all the way through Thursday, Friday, that was you ate good. So for Thursday and Friday, I was a bit caught up with some personal issues that I was handling. So my mind was not in the markets as much as it's supposed to be, and that is a win, which I'll explain briefly. You need to be self-aware that if mentally you're not there, you're not present 100% in the markets, that might affect your trading. You need to be present 100%. That's my opinion. Again, so there are people maybe who can do two things at once, like trade and then do some other things, depending on your level of expertise, and also who you are as a person. But for me, I need to be, if I am elsewhere or mentally I'm not present, I just tend to like let those trading days go by. Then I'll just come and get the information from the markets, backtest, journal, and so on and so forth. So that explains why I did not mm, take any trade going into Thursday and Friday. So now I have that out of the way. Now let's get surgical now. So you can see this is on a daily time frame. This is now I want to frame a bias. I want to understand. For me to understand what market will likely do next, I need to first of all understand what market has already done. That is the information I'm looking for. So I usually start on a daily. I always start on a daily time frame. There are times where I go to my weekly, but I mostly start on a daily because I'm an intraday trader. So on a daily time frame, this is what I see. Since I'm going to be using the futures chart because that is where it's clearer, and it's, yeah, that is where we swept the liquidity. So at this point, I'm looking at Friday's close. How did Friday close? Of course, I let Monday trade, so I'm looking at Monday in relation to the days prior and any higher time frame key levels that were engaged, and so on and so forth. So looking into this week, on Monday we traded higher, but we did not close above this down close candle over here. But looking at this, if you all know, like you all know that the Nasdaq and the S&P 500 has been bullish for all of our lives or something. We've just been bullish. Yeah, so but we've been bullish with some form of retracement, some short-term retracements, and then we resume. So this is I'm going to explain what this is over here. So once we swept the sell side liquidity, we swept this liquidity and then we closed back above. So above the equal relative equal lows, or the equal lows that were down here, we closed back above. We did not close below. So this to me looks like a manipulation or something, that we've just swept this all this liquidity over here and then we close back. So that gives me some form of bullish. I can now start forming a bullish bias from there. Another thing is, you see this down close candle over here, this becomes an order block. If I calibrate from the from body to body and then extend that to the right, you see this, the consequent encroachment represented by this dotted line over here. See how it aligns perfectly with that major sell side liquidity where we engaged and then we closed back above. We closed back above. Another confluence is we closed back above the premium high of this order block over here, this high over here. That is more information. That is information. If we closed above that, that is a level where that is something that is feedback that is telling me that we are likely going to be bullish going forth. But I need to see more and more and more. I need to align confluences. So what else do I need to look for? Now I'm going to zoom into our time frame. Since we swept this relative equal lows over here, you can also calibrate from this high to this low, like you'll see in future slides. But let's just stick to it here because I want you to just look at that price action in itself. So this is what we call a type 2 dealing range. This is for your information. When you see relative equal lows like this here, this is going to be a type 2 dealing range where you can plot from the lows to the highs and then anticipate that price will come back and sweep these lows over here. But that is something else. And just to, but a side note here, if you sign up for my mentorship, if you sign up for my classes, these are things that I'm going to be teaching you, and we're going to be discussing at length the dealing range, liquidity, market structure, power of three or AMD, all that, all those bells and whistles, all of them. So moving forward, as you can see here with these lines over here, these are the days of the week. This is Monday, Tuesday, Wednesday, Thursday, and then Friday. So there's nothing much over here. Now let's get into this transaction itself first. So here, what do we have? We have this dealing range from this high. As I've said, you can calibrate from this high to this low. This is another dealing range. Again, if you are familiar with market maker models, this now becomes market maker buy model. If you go back to the YouTube channel that I posted, or the video that I posted, the video that I posted on my YouTube channel, sorry, I explained what a market maker buy model, briefly what it is and how you can anticipate that we've switched gears and what to look for when you want to know that we switched gears from offering sell side, now you want to offer buy side. So just to repeat, one thing here is that you want to be looking for a change in state of delivery somewhere on your lower time frames. If the 4 hour, because it's a 4 hour, you want to look for a change in state of delivery on your lower time frames, ideally your 1 hour, 30 minutes, or 15. But I'd advise you stick to your 1 hour and 30 minutes first, or 45. That makes sense. So we will not be able, unfortunately, we won't be able to see this here on a 4 hour, but on future slides, if I'll remember to mention it, I'll mention it. You might see it maybe on a 30 minute. So now, what do I want you to concentrate on here? As you can see, I've calibrated this dealing range where we have the 25, 50, 75. Notice how they are literally aligning with the higher time frame key, the parent dealing range. Because again, this is like um, it's mostly the same, because the sweep below those relative equal lows over here was kind of like, it was so shallow, so you could just plot your dealing range like that. So now, away from that, um, what else can you see in this chart over here? Personally, I'm going to look at this levels that I've calibrated here, that I've highlighted. This becomes a 4 BC, or buy side imbalance, sell side inefficiency, or in short, just a fair value gap or imbalance. And we also have this other one here. It's a small one, but it's still significant. So now, as I've told you when I was starting this video, I do not trade on Monday, so I let Monday ride, or let it just print. Let it get out of the way, so that I can study how Monday's PA was going into Tuesday, so that gives me information. Get me? So what can I see here? When we opened on Monday, we traded all the way up into this 4-hour fair value gap over here, completely rebalanced that 4-hour fair value gap, and then closed the day there. On Tuesday, um, this is what happened. We opened and then we traded a little bit to the upside over here. If you go into your lower time frames, you'll see that this was like was this was, I think, this was during New York that we got this high, and then we sold all the way back down. So where are we selling back? Where do we want to see price, given that to see price hold, given that we already have a higher time frame bullish bias? Because remember, this becomes a buy side, a market maker buy model. Something maybe I forgot to mention was, or I already mentioned, the change in state and delivery over here. That confirms that we've switched gears from buy side to sell side, from sell side to buy side. But in this example, we have buy side. So now that becomes an invalidation point for me. If we do come back all the way to those levels, I do not want to see price come back to those levels if we are bullish. If we are not bullish, and then price revisits those levels, then that confirms that, okay, we are not bullish. We could want to seek sell side. You get me? So looking at Tuesday, you see how price dipped, and then it came and completely closed and completely filled this 4-hour fair value gap. But notice how it reacts to the premium low of that 4-hour fair value gap. We just come weak and then close back into the range. Again, look at how we react to the 25 DRT level over here. We just come, and I don't know if we touched it, I think we did, or if we did not touch the 25, the parent dealing range 25 DRT level we touched, and then we moved back up. But this alone is information that we did not close below the premium low of, no, not the premium, but the discount low of this fair value gap over here. We did not close below. I told you from the other video that the bodies tell the story, the wicks do the damage. So when we close above a higher time frame key level like this gives me information. This adds to my bullish bias already. So now, this was the trade that I went through on Wednesday. So if you've not watched that video, go and watch it, and it will give you information on why we had this movement all the way to the upside. Okay, so this is not going to be something that I want to repeat because I already highlighted it. But some things I can mention along the way is this here. You see how we did not close, you see how we came and completely filled this 4-hour fair value gap over here. If you compare that to the S&P 500 futures chart, this 4-hour fair value gap over here, you see how we do not close below. We actually leave it the discount low, we leave it, a portion of it, we leave it open. We do not completely fill this 4 hour fair value gap. That is what we call fair value gap SMT. It is actually another confluence that we want to see higher prices. That is a whole thing. Okay, that is a whole other thing that if I get into right now, we will not finish. So at this point, I want to align confluences. Another thing that will tell me that, we are not going to be seeking sell side, we are still on a bullish movement, is if I plot my another dealing range from this low to this high over here. And then this becomes what I referred to in my last video as a type 1 dealing range. You see, in a type 1 dealing range, I want to see 50, or I want to see price dip into 50 or the equilibrium level. I want to see it dip into the equilibrium or below the equilibrium, but I do not want to see it close below the 25 dealing range level of this relative to this dealing range over here. Because remember, on a 30-minute or a 1 hour time frame here, we have the change in state right over here. So if you are coming back to close below here, that already starts to invalidate your existing bias. So now, in this video over here, not video, but in this slide over here, if I zoom in a little bit, you can see how we respect the 50 DRT line over here. The bodies are refusing is not the word. The bodies will not close below that 50 DRT level. That is information again. At this point, you already understand that DRT will give information that you might not have had in the beginning. It's not always about looking at how key levels are going to be traded into. That is not all that. There's more that you can add to your analysis to even add more confidence and make your psychology, or make you have more confidence in the trade that you'll take. That is the work of ICT concepts and the dealing range. For me, that is what was a game changer. So like sometimes you might struggle with, hey, will this fair value gap hold? Will it not? So when you get information like this, then this gives me more confidence that yes, I need to see this hold. Okay. Now, away from that, you can understand that now we have the fair value gap SMT. We are not closing below the discount low of that fair value gap. We're also not closing below that 50% dealing range level from this low to this high. That is information. This is a type 1 dealing range. We are not going to close below. We are not closing. We've just tapped into the equilibrium level, and then we are starting now to see displacement out of that level. That is information. Trading ICT concepts is information. These concepts will give you information that some other strategy will not. I'm not discounting any other strategy. They all work, provided if you incorporate risk and all that psychology thing. But for me, I want to get why are we not going to be closing below these levels? Why are we moving? ICT concepts gives you that information. I hope that has hit home. Now, we move on to the next one. So Wednesday prints and trades the way Wednesday trades. I will not go through that as I've said, because I already went through this. So because of time, let me just move on. We come into Thursday. One thing you should know, that we should remember, is that we have a market maker buy model. So all this that is playing out over here is a market maker buy model. Where do we want to see price attack? Ideally, we want to see price attack that dealing range high over here, which is I think the all-time highs, and it's also where I marked as major buy side liquidity. That's something maybe I forgot to mention at the beginning. So you see, when you have a market maker buy model, or this kind of a movement, or market maker buy model, you want to be targeting the extremes, but that is not assured. It's not always assured that that is where price will go. You have to do more research, you have to do more analysis, you have to sit on your hands and get the feedback from markets. There's a time that it will just come to this 75 DRT level over here and then just displace and move lower again. That is very possible. So don't think that just because you're in a market maker buy model, that once we start buying, we are going to buy forever until we hit these levels, the extreme levels. No, that is not responsible trading. Responsible trading is seeing your setup, taking your setup, and then just exiting if you are an intraday trader. If you're a swing trader, then you are allowed to hold your positions all the way to this point. But if you're doing intraday, then assuming that this is where price will go to, most of the times it will go to those extreme levels. But that will come with experience. Get me? So I don't want to deviate from my point there. So what do we see coming into this coming into Thursday? Wednesday has already printed. So now coming into Thursday, it's a whole different thing. Coming into Thursday is going to be different. We already have an underlying bullish bias. Okay, so it's safe to assume that Thursday is going to be another bullish buying, another bullish day. But again, that is as I'm emphasizing. I think at this point I'm going to bore you so much with. You need to sit on your hands more. You have to wait more than you need to execute. Don't be so in a hurry to execute just because we are buying. That will come with experience. But as a beginner, you need to chill, just need to calm down and just literally just like see what the market is telling you. If it's giving you contrary information, you need to like chill and wait for the market to give you more information and feedback. You get me? Unfortunately, that is something that people do not want to pay attention to. Personally, I was one of them. So this is something that unfortunately for most of you, you'll have to learn the hard way. You get me? There are things in the market where you'll just have to learn the hard way. So what is Friday? What is Thursday giving me? So I want to see what Wednesday did in order to get information on what Thursday might do. So the first thing here I notice is number one, we closed above this 4-hour fair value gap that I had marked over here. We closed above it, and then now we were here, assuming that this hasn't printed already. So now we open. We are at this 4-hour fair value gap now here. So one secret that I'm going to one thing that I'm going to tell you that you should be looking for, and this is something that I'll also teach in my mentorship, something we call profiles. Just to give you a snippet of what profiles is. You see, once you are looking for, let's say for example, you want to see Thursday become a bullish day, you want to see the continuation to the upside. For profiles, how that day, this is profiles and power of three or AMD combined. There's how you want to see those sessions, the Asia sessions, the London session, the New York session. There's how you want to monitor price during those sessions. In a later slide, I'm going to show you what that is. You want to monitor how those sessions are going to print. That will give you even more information. It's all about aligning confluences, and I'm going to repeat that as many times as I will. It's all about aligning confluences. So the minute your 4-hour is giving you, okay, we did close above, we did displace all the way through, we closed above the 50% DRT line. Now I want to see like another movement to the upside to come and complete this market maker buy model. So one thing that the missing piece in that idea is what I'm calling profiles and power of three or AMD. You need to go into those lower time frames and look for how those sessions are printing. Again, if you sign up for my mentorship, this is something I'm going to be going through. So I'm done. I think I'm done making my sales pitch by this point. So that should tell you that there's a lot of information that most of these people, or let me not throw shade to mentors, but there's a lot of information that you do not have. And that, let me end it at that point. So let me get back into the market. So Thursday, assuming that you want to see a bullish day, this is what you need to look for going into your sessions. So for me, Thursday, again, as I explained, I was away from the markets handling some personal things. But once I was doing this calibration and once I was looking at what price did on that day, I realized that, okay, we opened, traded a bit higher, and then we sold back into the range. This selling here happened during New York. So what is this telling me? This is telling me, this is giving me more information. This does not, number one, this does not invalidate my bullish bias. There's someone here that will see this and then will be like, oh, maybe we've reversed because maybe we have an inverse fair value gap, maybe we have an SMT at the top, maybe again because we closed below this fair value gap over here because we had a strong candle close. Someone is going to say that this is a bearish engulfing, and then now is going to be like, okay, now we are going to be selling. No, that is not the point, bro. That is not it. You need to understand what is going on. So at this point, me already know that we have a market maker buy model in play. DRT will give me information that we are above 75, the 75 DRT line over here. One thing that I'm going to give you a hint in this video about DRT and their levels is, you see, once we are above 75 DRT, the 75 dealing range level, price tends to generate more liquidity. What do I mean by generate liquidity? Price will form like kind of like, this is where it is going to like form another high to like trick people, or this is where the algorithm is going to now induce some kind of manipulation. Because you know why? Because retail traders, or those that trade the trend lines and all that, we look at this level here. If they draw a trend line from this level and run it through this level here, this is strong. They look at this as strong resistance. If you draw that line from here, this point here to this point, and then maybe another point there, they look at this as strong resistance. So if they see some kind of bullish and bearish engulfing candle like this, they'll be like, okay, that is confirmed that this is going to sell. So they are going to enter their sells, place their stop loss maybe here, and then now wait for price to trickle down. But that is not what is happening here. That, unfortunately, that is not what is happening here. You need to understand. You need context. You need information. So what do I see? There's a lot I can talk about Thursday alone, but let me not talk about that here. I'm going to give you 2 or 3 hints later on. So me, I'm looking at this 75. We're above the 75 DRT line. What is that? We are most likely going to be generating more buy side liquidity so that we can trick the retail traders. We are all retail, but there's smart money and then there's retail traders. That is a topic for another day. But this is going to be tricking retail traders into thinking that, okay, probably we want to sell because this is a strong resistance over here. So now for me as a trader of ICT, I know that we are above the 75. This is characteristic of the algorithm once it gets to these points. So I'm going to sit on my hands more and wait for more information. Another thing I'm going to do is I'm going to calibrate a dealing range from this low. You can also put it here, from this low to this high. And then just look at this range as a type 1 dealing range. So where do I want to see a type 1 dealing range levels? The levels are a type 1 dealing range. As I said before, I want to see price just dip back into 50% or below 50% but not to close below the 75 or 25 DRT levels over here. So what is below this 50%? We have this 4-hour fair value gap. We also have another inverse over here. So these are going to be the sensitive levels for me. So I'm going to be sitting on my hands and wait for this information over here. Another thing is, I am not going to trade Thursday because I think I did not mention this, but something I'm supposed to mention is the trend is your friend. If you are looking for a market, if you are seeing a market maker buy model, why are you selling, bro? At what point? Why should you be selling? I'm not saying that counter trading is bad. There are people who counter trade, and that is something I also do sometimes. But just to sieve out all that unnecessary trading and all that, I just want to be in those high probability setups that are in line with the higher time frame buyers. You get me? So counter trading this was not an option for me. Could I have traded it? Yes, but I would have opted to sit on my hands. So now this becomes just a type 1 dealing range where we want to sell back into the range, offer some buy side probably, offer some we want to dip back into fair value gap, offer fair value. That was the point I was trying to make. see where we are respecting the premium high of that fair value gap over here. We just tap this. We actually tap the 50% first, and then later on you come and tap it into the fair value gap. If you calibrate these fair value gap levels over here, I guess this becomes the upper quadrant of that 20 of that fair value gap. But anyway, since we're here, we do not get any candle close below the premium high of this for our fair value gap. Another thing, just notice how the consequent encroachment is directly, or it's aligning perfectly with this 50 DRT. That is information. That tells you that this fair value gap over here is a very sensitive area. It's going to play a key role. That is the word to use, a key role in price. So not to get ahead of myself, this to me becomes a type 1 dealing range. So I know that there's no way that we want to. Okay, there are instances where this will be what do we call this? What is the word? This will be violated, but that again is something else. So that will give me information. If by now you are following, is what is recurring from me is there's going to be information that I'm getting. Get me? Like there's always information. I'm waiting for information, feedback. So let's say that this fair value gap doesn't hold and we get a down close candle and we close back inside this range. Then that now starts what do we call this? That now begins to invalidate my bias. That now starts telling me that, you know what, we could have switched gears maybe for a minute or just for a few days coming into the future, that probably we want to now start seeking sell side. We now want to start seeking sell side. So that will give me that information. But at this point, we did not close. So I'm looking at this and I'm noticing that, okay, yeah, we are still bullish. So this is Thursday. So on Friday, you can just from this chart, you see what happens. We just tap this. On Friday, we open, close back above the 50% DRT number one, the premium high of that 4 hour value gap number two, and then now this gives you information. Now you need to now go into your lower time frame and just look at what happens next. At this point, this is that 4 hour value gap over here, the premium high. I have cleaned this a little bit. So now this is what you're going to be looking for on Friday, going into Friday. You see, once we dipped into that 4 hour value gap, and then we had these reactions away from this 4 hour value gap. This tells me that price is still wants to offer buy side. So what will confirm that? As I explained here, that I want to see a change in state and delivery at on my 1 hour. The same goes for this here. So looking at this, I see that we closed above this down close candle over here. So this becomes my change in state of delivery. I do not want to see price come back and revisit this area if we are bullish. We could revisit, but that again will give me information and tell me that we are most likely going to invalidate your bullish bias. That is me and the algorithm having a conversation. That is just a joke I told, but it's okay, no problem. So now, what does Friday do? Thursday, this is what Thursday did. I'm going to come back to Thursday's PA and explain something, but this is what Friday's trading was like. So we open on Friday, we generate liquidity over here. This is at around 2 or 1:45 p.m. So this ideally is like London. So London has given me the low of day, but this is not a low of day that I really am confident with. Regardless of that, we are in this dealing range here because this is Thursday's high, and then this is Thursday's low over here. No, this is not Thursday's low, but this is a low that was formed during Thursday. So if I calibrate this dealing range from this high to this low, this becomes another dealing range. So this is now another market maker buy model inside a higher time frame market maker buy model. So that is even more confluence that you're supposed to be looking for buys. So on Friday, I know that I want to be looking for buys. So what is this on a lower time frame that will confirm? I need to see probably price form the low of day. This is something that this is what I was calling power of three and profiles. I want to see London London most likely. It is not a must that London will give me the low of day. It depends on how that candlestick will print. But ideally, I want to see London give me the low of day, trade away from that, get another change in state of delivery like we did here. See this series of down close candles? Once we close above, this becomes change in state. So now I do not want to see us revisit London's low or the low formed at London. This becomes my low of day. And you see where we form it? We form that low at the 50% DRT line. Although we did not really touch it, but that's besides the point. So if I'm looking for bullish prices, or I want to see price move to the upside during the New York session, and I already have a potential low of day during London, what do I want? I do not want to see price come back and revisit these lows. So I'm going to use this series of down close candles, or this order block, because this becomes an order block. I'm going to use this as my invalidation point. So ideally, this is a safe place to place your stop loss. If you're following, this is a safe place to like place your stop loss. So but I do want to sit on my hands and wait. There are times where I'll engage after I just see this, but it's always good to sit on your hands. Once we close this up, we close above this down close candles, there are some traders that will just slap your buys, have your stop loss over here, and then just wait for New York to give you the volatility that will take you to your targets. That is how some people trade, but for some of us may need to see more information. So now this is what I'm talking about. This becomes my invalidation point. Again, I can also use this down close candles as points where I can get more information. How? Like this. I'm going to have to zoom in like this. So now you see this headed box over here, rectangle over here. This is from this high over here of this down close candle all the way to the wick. So if I can extend that rectangle to the right, you can see how the consequent encroachment of that level is respected to the like the level of respect this level was given is crazy. Like we just weak, and then this is at 9, I think 9:30, yeah, when the equity is open. We get that final push to the upside, and then we complete that market maker buy model on a lower time frame. So this, if you missed Wednesday's trade, this was the next trade that you would have taken. If you ask me, all you'll have done here is just understand that Thursday was just a day that we were coming back into the range, and then once we got a change in state here, this was your light bulb moment to tell you, okay, I do not want to see us like come back to these lows. So this again would have been your area where you will have told yourself, you know what, we have closed just above, we've closed, let me go back to this, we've closed above this down close candles. I do not want us to come back to this low over here. So now when you get this kind of reaction over here, if there was an SMT, I'm not sure if there was an SMT here, but if there was, that is even more, that is the better. That was more confluence. That, you know what, now we have a protected low. So now you slap your buys, move, maybe place your stop loss to this low because this is the protected low, and then just be patient and wait for your price targets to be hit. That is how Friday traded. Again, even to add more confluence, you see, if you measure from this low to this high using your dealing range, I did not calibrate it here, but if you measure from this low to this high, notice how the 75% DRT line will be respected, or the lower quadrant, the discount, or the lower quadrant, which is going to be either your 75 or 25. But how you calibrate that is something I teach. But just look at how the lower quadrant is being respected. Yeah, that will give you even more information. So at this point, you have all the confluences you need in this world to just go long. But that does not come with just listening to this video and going into your charts and just plotting DRT ranges and order blocks and fair value gaps and all that stuff. You need to have studied, you need to understand, you need to have information, you have to have context to what you are doing. So finally, let me go through what Thursday sort of did over here. So we have the open here all the way to here. So this is now Friday, this is Thursday. So I was saying, if you can remember what I was talking about profiles and AMD, I will not go into details on all that because that is something I can talk about for hours. But anyway, remember I said how those specific sessions print will give you information on what kind of a day that day will be. So here we have the 6 p.m. open. We have this is the midnight open. We have this is the 2 a.m. open. We have the 7 a.m. open over here. This is 9:30 over here. And then this is 10. So I want you to focus on the 2 a.m. to 7 a.m. because that is the London session. This is during London, by the way, but 7 a.m. is when the New York session now, Killzone now starts. Killzone is a different story now. Let me not lose you with that. But just looking at between 2 a.m. to 5 a.m., but I've extended it a little bit to 7. Looking at that PA, this is where London session is printing. So for me, going into Thursday, if you go back to the higher time frame perspective where we saw that we are in a market maker buy. On Thursday, we had closed above some 4-hour fair value gap, and now it was ideal for you to think that or to anticipate higher prices also going into Thursday. The point I'm trying to make is before you slapped your buys, it was important that you came into your lower time frames and figured out how those sessions printed. That is the point I'm trying to make. You should have gone into your lower time frames and figured out how those sessions printed. So I will not get into the details of all that, but one thing I'm going to just give you a very huge hint is if on that day if on Thursday I'm expecting a buy day, I'm expecting that the daily candle is going to buy because I want to trade that movement to the upside on a daily. First of all, I want to look at what London will do, ideally. If London will not give me the low of the day, then that immediately starts to invalidate my bullish bias for that day. So in this example, you see how from 2 a.m. all the way, because 5 a.m. is around here. So from 2 a.m. you see that there's nowhere we print a low during London. Between 2 a.m. the kill zone for London is between 2 to 5. So there's nowhere we get that low of day forming. We do get this close above this series of down close candles over here, but that doesn't really make that sense for me. So I really, you see, from the word go, I'm already telling myself, you know what? By the time I'm coming into the market, and then look at how London is printing, I'm like, no, we do not. This already is giving me a very big red flag that, you know what? This is not going to be. This most likely will not be a buy day for me. This might be another day. This might be a day where we are going to maybe sell back into the range. The point I'm trying to make is, in short, those sessions, Asia, London, New York, if you study how price is printing on a lower time frame, say a 30-minute, 15, if you look at how price is printing during those sessions, that is a very, very, very big indication. That is a very, very big source of information, a source of feedback that will give you information on whether the bias you have going into that day will play out or not. That information alone is gold. So if I were you, I'd go back and back test. Just look at how, let's say for example, you wanted Tuesday to be a buy day. Go into those, dissect those daily candles. Go into a 30-minute, into a 15-minute. Analyze how the sessions formed during that day. Look for your low of day, look for your high of day, depending on your bias. And if if you have information, if you're well versed on Power of 3 or AMD and profiles. What do I mean by profiles? Where your low or high of day will form. That is all I'll give you on that. Go back into your chart and look at that, and you will thank me later if you haven't already figured that out. Okay, so that was Thursday, and then Friday happened the way it happened. So that is how that week was. That is how price printed for that week. We haven't really gotten to objective, but my thinking is we might gap on Monday. Most probably, we might gap and completely fill this and completely like finish this market maker buy model because we only left with a little bit here. So yeah, that is the recap for the weekend, for that week, and I've already given you like a forecast for next week. So yeah, thank you so much for listening. Uh, as I said, my mentorship is up and running, so make sure you book your spots. This is what I'm going to be teaching. This and more. There's a lot a lot I've not said here. There's so much more I've not said here. So book your slots. Prices are slightly negotiable, so that is something that is a conversation we can have. So DM, WhatsApp, all that stuff, Twitter, you can reach me on all those spaces. So this was it for this week. See you next week. Have a good one. Cheers.